when it comes to the outlook and the level of demand that you're seeing from clients?
Well, you know, I think Xero continues to see very nice and strong demand across the markets in which we play. As you know, Australia, New Zealand, the UK, the US, Canada, Singapore, South Africa. And I think it's because of what we do, which is, you know, we're a tool to help you get online as a small business and get your finances sorted, which we think serves you well in good times and certainly also in uncertain times.
A lot of these markets are facing some challenges, though. QuickBooks Online in the US, for example, is making very fast strides. What's your strategy to catch up?
Well, interestingly, I think we enjoy the benefit around the world, including in the US, of having really loved software that has two channels, both the direct channel and accountant and bookkeeping channel. And in the US specifically, you know, while we're smaller than QuickBooks, I think the accountants and bookkeepers we work with really appreciate that we run an open ecosystem, as do the small businesses we serve. You can hook us up to Gusto, you can hook us up to Melio, you can hook us up to Bill.com. And if you know anything about the US, you know it's a mix and match fintech ecosystem. So our positioning is one that's quite open relative to other competitors.
Are you concerned about revenue per user being low compared to QuickBooks Online in the US? Is there a strategy to try and close that gap?
Well, interestingly, around the world, we have said our strategy is a dual strategy. Number one, to keep growing subscribers. Number two, to deepen our penetration and usage of our products. And so I think we have noted to the market that, you know, while Xero has historically grown subscribers at a very fast rate, over the last few years, we're starting to increasingly focus on growing ARPU, as you noted. Now, that's a function of what products and services you offer, like payroll and payments, as an example, as adjacent jobs to bookkeeping or bill pay. But it is also a function of just deepening and changing our product mix and making sure that customers know that we have a variety of SKUs that they can use. So certainly we're on a journey to increase ARPU, but not taking our foot off the gas on subscriber demand either.
And then in markets like Australia and New Zealand, we're obviously looking at pretty good levels of penetration already. So what's your strategy there in terms of taking it to the next step?
Well, I think you've noted that despite both these markets, Australia and New Zealand, having quite deep penetration, we continue to see strong subscriber growth. But as we think about growing Xero into the future, we talk a lot about what we call, you know, growing those super jobs, making sure that we have, you know, all the things we need in our payroll product, starting to extend our products, like adding time and attendance scheduling as an example. So in markets that are very well penetrated, while we continue to grow the core, we also keep adding new jobs. We recently announced, for example, a partnership with Deputy, the leading time and attendance solution in Australia, to in fact extend our functionality further and serve not just the subscribers we have, but to keep growing our TAM in those markets.
What's your confidence level when it comes to investment and hiring at the moment? Are you looking at making more hires?
You know, I think we have been on a journey at Xero, which is, I'd say, to balance high growth with profitability. And as you know, over this past year, not only did we return to profitability, we reported, you know, on 22% top line growth, we reported EBITDA of almost $500 million, or over $500 million, and a 75% rise. So I think when we look at our outlook, I would say measured hiring. We think a lot about deploying our capital in line with our 3-year strategy, which we shared with the market just in February. And I think our belief is that we want to be kind of controlled and smart allocators of our capital while we continue to add headcount.
Sukhinder, your background has impressive levels of corporate activity, of M&A activity. So do we take away from that in terms of what the plans are for M&A or potentially even a sale? What's your sort of goal in this role?
So I think at Xero, I mean, our goal and my goal is to grow our footprint and our impact for small businesses. And I think we have always been programmatic acquirers. If you look in our history, a lot of our Australia functionality was in fact built through acquisitions. And in recent years, we've continued that trend. So I think I certainly would expect, as we are now profitable and, you know, obviously growing our cash flow as well, we just recently refinanced our convertible note, that we do see programmatic M&A as a way to keep growing Xero's footprint. We're focused on growing our impact and see systemic M&A as a way to do that.
Sukhinder, we really appreciate your time today and for joining us. Sukhinder Singh, Cassidy, who's a CEO at Xero. Let's broaden out the look when it comes to the payments industry across the region, and in particular when it comes to environmental impact. Bloomberg Intelligence in a new report saying that Australian payment companies' environmental disclosure is substantially better than their Asian peers. Xero is actually a front runner. Bloomberg Intelligence senior analyst Matt Ingram joins us now. So we've just been speaking to the Xero CEO. They're actually well placed. So where and how do you see the progress in this aspect?
G'day, Heidi. Yeah, look, Xero is frankly miles ahead of its Asian peers across the board, whether it's committing to adopt TCFD. They've actually got some biodiversity policies which makes them really stand out. That's important given the change of legislation here. Their emissions are quite low and they've offset those since 2019. So they've actually got net zero emissions. They've committed to net zero for their clients by 2050. And across the board, their disclosure ticks a lot of boxes. So in terms of that risk management, we think they're really doing well.
Is that a similar standard with other Australian payments companies?
Yeah, the Australian companies, so EML and Zip are also, and Tyro are also definitely above their Asian peers. Biodiversity policies are lacking for those companies, but their emissions are much lower. They have committed to TCFD, and I think generally speaking, yeah, those Australian companies are also above the Asian on the disclosure, but also on the emissions.
Southeast Asian players, though, not faring quite so well. Why is that in terms of emissions?
Yeah, look, in a way, Heidi, it's yes, they are standing out as having very high emissions. To be fair to them, they are much lower than the MSCI FinTech Index. I think more than half lower. But also they've got different business models. Xero, as the CEO said earlier, is largely an online platform. Their emissions come from data centres and basically generating electricity. C and Grab have massive vehicle fleets. Their businesses involve deliveries and moving cars back and forth. And so their emissions are so much higher because of those car fleets that they have to have because of their owner-operator drivers. Yes, their disclosure isn't as good as well, and I think partially that's just the pressure isn't there locally, whereas we've got some big super funds here that really insist on having that better disclosure in Australia.
Yeah, that's interesting. So that sort of pressure point is one of the incentives, I guess. Is there sort of massive regulatory differences too?
Regulatory differences, well, yeah, clearly we're at the forefront of a lot of that. Probably not where Europe is, but I think we're at the forefront of that regulatory push. These companies aren't as tightly regulated on this type of disclosure as the banks and the insurers, but certainly I think high water floats all boats, and I think if your peer group in the financial sector are encouraged to have high disclosure, then that clearly benefits the market as a whole, and that's what we're seeing with these Aussie payments companies.